Comments out of the heads of the Chicago and the Atlanta Fed today suggested that tapering may begin as early as September, but our next guest is expecting the opposite to happen. He's saying more QE. For more on this front, we are now joined by Peter Schiff, CEO and Chief Global Strategist at Euro Pacific Capital, joining us from Connecticut. Peter, great to have you back with us. And let me get your take in terms of two Fed presidents today talking about tapering in the September time period. What do you make of this?
Well, again, it's all talk. It's part of their deliberate disinformation campaign to actually pretend that tapering is even possible, that the Fed has an exit strategy. It doesn't. I think the Fed knows that the only thing propping up the phony recovery is the QE, and it's going to require more and more of it to prevent it from collapsing. But the Fed can't come out and admit that, so it has to pretend that it's going to taper as it's looking for an excuse to do the opposite. And it will come up with an excuse when it comes time.
Well, so let's look at about some of these underlying fundamentals of the U.S. economy right now. GDP is an example. What's your take right there? Because some people are actually saying that the most recent economic data, maybe not the jobs picture last week, but some of the other data, has been a little bit more positive. What do you think here?
Well, maybe because the government created it, but they have a habit of downwardly revising the forecast. So the first quarter was originally reported at 2.5. It's now been revised to 1.1. So the 1.7 that we got, I think, is going to be revised a lot closer to zero. But I already think it's probably zero or less because the government had to assume that inflation was just 0.7% in order to get a number as high as 1.7. And again, I think the government is misrepresenting how much inflation really exists. And so they're also misrepresenting growth. I think we're in a recession already, and I think the anecdotal evidence supports that view.
Peter, let's talk about that a little bit because, we did have you on, then we had some technical difficulties with the camera. So I want to dig into these details a little bit as it relates to GDP and why you actually think that we're in a recession. I do think that that's an out of consensus call. So what exactly are you looking at for that call?
Well, first of all, we're still losing real jobs. Good-paying full-time jobs are disappearing. The jobs we got in the month of June are mostly, service sector part-time jobs. In fact, in the month of June, 400,000 people who never got college degrees got jobs, but 250,000 people who were college graduates lost their jobs. So we're getting these low-paying jobs. We're transitioning from a full-time economy to a part-time economy. You've got record numbers of Americans living on food stamps, living on federal disability. The labor force is shrinking. The participation rate is shrinking. Our net energy use is shrinking. All the anecdotal evidence shows that the economy is contracting. Real personal incomes continue to fall. Hours worked going down, wages going down. This is all consistent with a weakening economy. The only thing the bulls can point to is that real estate prices are going up or that stock prices are going up. But that's not because the economy is growing. That's happening despite the economic contraction because of all the speculation being generated by the Federal Reserve and the cheap money.
If I could jump in, my understanding is that a lot of the job openings, they released the job openings data this morning, and it was, again, up near highs, and that a lot of the job openings were actually in areas that required technical expertise and skilled labor as opposed to, the lower income jobs.
Well, maybe there are some jobs like that, but they probably aren't going to fill them because we don't have a lot of people who are even qualified for a lot of those jobs. Look, we just got news today that came out that said the age of American automobiles on the road is 11.3 years. That's an all-time record. I mean, why can't Americans get new cars? They can't because they can't afford new cars, or they don't even need cars because they barely drive the cars they have because they don't have jobs. And if you don't have a job, you don't have to drive back and forth to work. I mean, all of this anecdotal evidence shows that the American households are getting poorer and the economy is shrinking. The government is trying to create the illusion that it's growing, but all that's standing between us and recession is the QE and reckless speculation that is going on, and the wealth effect as people think they're richer because they're diluted by rising stock prices or homes, and they're going out and spending more borrowed money that they can't repay to buy things that they can't afford. And this ended very badly in 2008, and it's going to end even worse this time because the Fed is making bigger mistakes now than it did then.
Peter, let me ask you, in terms of it's going to end worse this time versus last, that's an interesting statement. And also, does it dovetail into your concerns that people are ignoring the risk of inflation? What is your view on that front? I think that's really interesting.
Well, first of all, the government is not being honest about how much inflation we already have. So the government is misreporting the inflation. So a lot of people, unfortunately, believe the government rather than their own eyes. But the other thing that we're able to do to temporarily mitigate the damage of inflation is we export that inflation. We export dollars. We have a big trade deficit, and we send the world our dollars, and the world sends us their stuff. And so stuff comes in and money flows out. And so that keeps a lid on domestic prices, but that causes inflation in our trading partners, countries like China. They have to absorb all that cash. But eventually these flows are going to reverse. A lot of the money we've been sending out is going to come back to America, and the goods aren't going to flow in anymore. And now we're going to have even accelerated inflation beyond what we already have that's being underreported by the government. So inflation is a big threat. It's only going to get worse. The government has no tools to combat it. That's why it wants to belittle it. In fact, inflation is the government's plan. Quantitative easing is a euphemism for inflation. The federal government and the Federal Reserve want to inflate away all the debt. The U.S. government has a lot of debt. American households have debt. Corporations have debt. It's impossible to repay it. They want to inflate it away, but they don't want our creditors to realize what plans that we have. And so we're going to continue to misrepresent how much inflation there is so that we can destroy the value of these liabilities without our creditors getting wise and fleeing the bond market and creating a bigger crisis.
Peter, we've got 30 seconds left. I really want to get your take in terms of, with inflation, where do you see that rate going? Call it 2 years out, if that's your time frame. And then what do you buy?
Well, I have no idea if the government will ever acknowledge that there is any inflation. They're going to do their best to cover it up. But we're going to have double-digit inflation. I mean, we're probably closer to 10% than zero right now. The government claims we practically have no inflation. But, you know, if you're an American, you got to get your money out of the U.S. But even the Canadians, you guys can buy gold. Gold's down. The gold stocks have been killed. And, I think a lot of the emerging market economies, there's a lot of value there. I think the key is to get out of markets and economies and currencies where you're going to have a lot of central bank money creation because ultimately that destroys the real value of those investments.
Peter, great to have you on the program. Thank you so much for joining us.
Thanks for having me on.
Thank you. That was Peter Schiff, CEO and Chief Global Strategist at Euro Pacific Capital, joining us from Connecticut. And if you have questions or comments or anything else you see on the show, you can email us at marketsense@bnn.ca, or you can find us on Twitter and send us a tweet at MarketSenseBNN. And still ahead, we're going to take a look at the top Canadian picks of our guest co-host. Stay with us.